I think that's probably one of the nicest introductions I've ever had, so thank you. Ladies and gentlemen, good morning. Well, despite the fact that I have been working with my friends in Iceland for many, many years now, I think it would be completely wrong for me to stand up here and lecture you about how I think the Icelandic economy should be managed or how its capital markets should be managed. So what I want to do is actually touch on four areas this morning. The first area is actually that there are major changes going on in the investment management industry, and I just want to touch firstly on those major changes. And these are very relevant to investor attitudes towards investing in Iceland. I think the first point to make is that managing money market funds, managing bond funds today as an asset manager is extremely difficult. If you think we have now 14 European government bond markets where two-year yields are now negative, I think one of the worst investments in the world I can think of at the moment is actually lending money to the Swiss government for 10 years, where you have to pay them 40 basis points per year for the honour and privilege of lending them money. Now, Iceland is actually a positive yielding economy. So in terms of money markets and fixed income, that positive low yield in Iceland is attractive for foreign investors. I think the second point to make is that we are seeing a period of investor intolerance, and particularly since the financial crisis of 2008. So if investors historically didn't like something, they would go underweight. Now it's very simple. In this period of intolerance, if they don't like something, they think it's going to underperform, they will just exit. And that arguably is one of the reasons why we have volatility in markets. Linked into that, there is an increasing focus, I think quite rightly, on transparency, governance issues, and risk management. And in fact, at the Credit Suisse Research Institute, we've recently published a report correlating corporate governance and share price performance. And there is actually a very good positive correlation. So I think increasingly transparency and governance, both at company level and at government level, are becoming very important. I think another aspect is the growth of asset allocation products, and I think that top-down approach will continue. I think the next point to make, which is very relevant to Iceland, is the increased asset allocation to illiquid as opposed to liquid markets. And since Iceland has a relatively small government bond market, a relatively small publicly quoted equity market, one focus for foreign investors in Iceland is to focus on long-term illiquid assets, whether that be real estate, infrastructure, or private equity. In addition, we're seeing increased evidence of interest in non-correlated, non-traditional asset classes like insurance, like trade finance, like leasing. And also very relevant to Iceland is the renewed investor interest in countries which are emerging from periods of economic stress. And I don't have to tell you that investing in emerging markets has been a great way of losing money over the last 3 to 4 years. This year, money is now coming back into either emerging markets or developed markets which are emerging from stress. Linked into that, we're also seeing a big switch into the exchange-traded fund market away from active management. So those are the trends in the asset management industry. I then wanted just to show you as my second topic, my sort of 10-point model on the inputs to looking at sovereign risk and what are the stress points in sovereign risk. And if one looks at Iceland today and looks at Iceland in 2007, clearly these stress points were exceptionally relevant in 2007, and I'm pleased to say that we've got a very, very different picture today. Clearly, over-leveraged banking systems. Iceland was not unique. We had major problems in Spain, Cyprus, Ireland. Even today, the Italians are setting up what I call a bad bank with a capital of 5 billion euros. So, the situation of sorting out the banking system is not solved worldwide. The second risk point is where we have had real estate or other asset bubbles. I don't like using the word guarantee, but I can guarantee that whenever we have a bubble, it will burst. And we've seen that spectacularly in economies like Spain and Ireland again. Countries with substantial current account deficits, a general rule of thumb is that if your current account deficit is heading towards 10% of GDP, your economy has got a big problem. And obviously a lot of the Eurozone economies went close to 10% of GDP in 2009 and 2010. Excessive budget deficits. I think it's actually worth reminding ourselves that at one stage in 2007-2008, the Irish budget deficit was over 20% of GDP. And another factor, coming back to my earlier point about governance and transparency, is looking at sovereign good governance and also revenue collection. And I just mentioned Greece there because I wouldn't make this statement in Athens because I think they'd get upset, but I can make it in London, whereby I think poor revenue collection and avoiding taxes is frankly a sort of national hobby in Greece, and it's still very much so. Other stress points, we live in a world where deflation is a fear, but clearly stress points in the past have been areas of hyperinflation. I think one of the reasons why Venezuela is in the process of becoming a failed state, and that's a strong statement, but I believe it, is because they have inflation of over 200%. Unsustainable fixed exchange rates, as we've seen with Argentina, as we've seen in the Asian crisis, clearly that is a stress point, as are also where we have an over-leveraged corporate sector. And one of the reasons why we as investors are somewhat concerned about China and the risk of a hard landing at the moment is that the leverage levels in the Chinese corporate sector are very high. Capital flight obviously is a problem for many economies. Again, Greece has had a major issue with capital flight over the years. And then political risk. And with due respect, Minister, and my other Icelandic friends, I think compared with what potentially America could experience in November with a Trump presidency, compared with what we might experience on the 24th of June, the day after our EU referendum, frankly, I think your political issue last week I would describe as a hiccup, and I hope it stays as a hiccup. Now, my third area I'd just like to focus on is just looking at some of the ways the Icelandic economy has been turned around. And these graphs show a really, truly impressive picture. What was a very problematic current account deficit, well above 20% of GDP, has now moved into surplus. And that, I think, is a very positive underpinning for the Icelandic economy. General government debt has now come down, as we heard from the Minister, is projected to come down even further. Just to give you some perspective on this, Iceland, in contrast to Italy has debt to GDP of 135%, Japan has debt to GDP of 250%, Greece has debt to GDP of around 170%. So, this improvement and these numbers are impressive. And, the government budget balance is moving back into surplus, and that has been achieved in a period of positive growth, and that positive growth is shown in the decline in the unemployment rate. And that unemployment rate clearly was at a crisis level, close to 9%. And Iceland now actually has, I think, the lowest, if I'm correct, unemployment rate in Europe. And just compare the current unemployment rate with the Eurozone average of still over 10%. Currency stability is very important. Clearly, obviously, in the crisis, the currency got hit hard, but we're now in a situation where I think it is fair to say that foreign investors are relaxed about the outlook for the Icelandic krona, and I don't think there are any expectations of increased volatility there. So, where are investors going to look? I think the first area, which I mentioned earlier on, is infrastructure. There is strong demand worldwide for infrastructure assets. Iceland is long energy. Iceland particularly is a world leader in green energy and geothermal. So I think that is the first area where there is strong foreign investment interest. Transport and Iceland as a transport hub. Whenever I go to Reykjavik, I'm always very impressed, not by the number of passengers in transit between Europe and America, but also the number of passengers who are actually going to Reykjavik, then staying there for a few days before they then continue their journey between Europe and America. So that transport hub, I think Iceland has successfully exploited, and I think will continue to successfully exploit. I think just one caveat is, please keep your airfares reasonable, which is a plea rather than anything else, and they are reasonable at the moment. We all get very worried about global warming. And perhaps this is a somewhat politically incorrect statement, but global warming actually could benefit Iceland because the North Arctic route, that route from Asia to the North Atlantic, over the north of Canada, because of global warming, that route is opening up. The North Atlantic is opening up, and potentially Iceland has a very interesting opportunity in exploiting those new trade routes. Now, when we look at infrastructure, we also look at social infrastructure. Education. This is one area where the UK has been particularly successful. If you look at the institution just next door to us, the London School of Economics, I would actually say that the LSE has been remarkably successful as an export industry. Just look at the number of foreign students who study there. I think education has strong potential. Likewise, healthcare. And we've talked about the tourist industry. Iceland has been very successful in developing its tourist sector. And I think the only caveat on the tourist sector, which I guess is a note to the central bank, is just make sure that your tourist sector does not, and this isn't the situation today, but it was the situation in 2006 where tourism suffered from somewhat of an overvalued exchange rate. So tourism is sensitive to the exchange rate. Industry, investment, obviously energy exports, and there are discussions between the UK and the Icelandic government over a new power line, which I think would probably be the longest power line, underwater power line in the world for exporting energy to the UK. And by the way, a message to the Icelandic government, since in the UK we're making such a mess of our energy policies, I think frankly we need your energy. So I think you've got a captive consumer in the UK there. Energy consuming sectors, obviously in the past you've been successful in using your energy surplus in the aluminium sector. I think if you look at other industries which are big consumers of energy, Iceland has an advantage. And the tech sector, Iceland, I think, has some great opportunities in the tech sector. Healthcare, I mentioned, and obviously the fishing industry is a traditional strength of the Icelandic economy, and if you actually look at global demographics and global food consumption, Iceland has, I think, a strong competitive advantage in what we would regard as a rather old traditional industry, and I would actually say, don't look at fishing as an old traditional industry. It is an industry which has very significant upside. So I think, just to conclude, obviously there are some traps. I think the first trap is you want to be careful about what I call high-velocity money going into your money markets and your bond markets. You also want to avoid the trap of a limited number of foreign investors owning too much of your bond market. And I use the example of South Africa, where I won't mention names, but I know that 3 foreign fund managers now own about 60% of the South African government bond market. Iceland does not want to get itself into that trap. You do want to encourage longer-term investment, and I think one theme which plays to Iceland's advantage is investors such as ourselves are increasingly increasing asset allocation to long-term illiquid asset, whether it be private equity or infrastructure, and therefore actually the small size of the Icelandic equity market, I actually don't think is a stumbling block. Having said that, obviously it is a priority to develop Iceland's capital markets, but I think we've all learned from history that developing those capital markets in line with the size of the economy is very important. Freeing the capital account, the Minister commented on it, and I very much welcome this move to freeing the capital account by the end of the year. I think that that would be very positive for global investment and investor attitudes towards Iceland. I think my final point is that we produced last year a research paper looking at the economic success of small countries. And I'll make sure that the Minister gets a copy of this research report. But the small countries can have very significant advantages. Next week, I'm going to be working in Singapore, a classic example of a small country which has been hugely successful. It would be rather nice to see that Iceland become the Singapore of the North Atlantic. So the challenge is yours. So thank you very much.